The likelihood of an agreement between China and the United States is obviously leading the sentiment on risky assets, and that is completely okay. But we must be very, very cautious about believing that this will change the trend of global growth and change the trend of global trade. If we look at the data, the reality is that the slowdown of China and the slowdown of the United States were already evident before any trade dispute happened. More importantly, the Chinese slowdown has absolutely nothing to do with lack of imports. Therefore, if we see an agreement, let's remember it will be an agreement of sum zero, which means that if China imports more from the United States, it will import less from other countries, less soya from Argentina, less natural gas from OPEC countries, etc. Furthermore, there is the slowdown in the United States economy comes from the late cycle adjustment, which is perfectly normal, and the slowdown in the Chinese economy from debt saturation and excess of previous stimuli. In the case of the Eurozone, we cannot expect improvements from Germany spending more. Why? Because we have already seen it, because this already happened. There is no evidence that Germany is spending less than what they need or that they're investing less than what they need. So if Germany decides to increase its imbalances, the only thing we will see is a worsening of the German economy, not an improvement of the Eurozone. Think about this. If Germany increased by 30% imports from the peripheral countries, the impact on those countries' GDP would be less than 0.2, 0.3% in the best of cases. Therefore, let's be prudent about expecting changes of trends while recognizing that markets are actually reflecting a more benign stimuli and a more benign monetary policy. Thank you very much.